Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about how to realistically make $1,000 every single week from swing trading in the stock market. So I hope you guys all enjoyed this. If you guys do, hit that like button, subscribe, and if you guys are watching and you're like, who is this random guy on YouTube? My name is Carter. I'm a full-time swing trader in the stock market, and with that being said, we do have an amazing school where I teach people how to trade. It's not a get-rich-quick, it's not alerts or anything like that. We teach honest strategies that I've used over the past 6 years to trade in the stock market. Now, obviously, the more you learn, the more you guys are going to earn. So invest in that education. I'll see you guys in there. And you guys can use code YouTube to get 20% off. So make sure you guys click that link, sign up, and I'll see you guys in there. And guys, let's jump into this. So the first thing that if you guys are just starting out with trading and you're like, how can I get the ball started and become a successful and a full-time trader, you're going to need a broker. Now, a broker is how us as investors and traders have access to the stock market. Back in the day, you'd have to call up your broker that worked at the exchange or had an affiliate with them, and they would have to do the order that way. Nowadays, everything is all electronic, which makes it super convenient, but it also makes it not convenient because it makes it where beginners now can open up a Robinhood account today, fund it with an account, and start trading. And obviously, the more you learn, the more you're gonna earn. And that's why we've always heard those studies of 85% of traders fail. Yeah, that makes sense. Honestly, if you think about it, 85% of people that have no knowledge and open up an account and they buy a stock, hold it for more than a day and less than a year, they're going to lose money. But just like with any business, you have to have a plan, right? 85% of businesses fail. The ones that succeed know what they're doing. They have a business plan. Trading is the same way. You have to have a trading strategy, a trading plan, a checklist before you ever place a trade to ensure that you're going to be choosing quality stocks rather than just random stocks. When I first started out trading, I would just buy random stocks that I felt like have potential. So the great thing about having a broker, I use Moomoo. They're awesome. I'll put them down below for you guys. You guys can get up to 20 free stock. But why I use them is they specialize in trading. So, brokers like Robinhood are awesome for people that are just getting started or maybe that just want to invest for the long run. But if you want to be an active trader, you have to have a broker that kind of meets your approach. So let's kind of jump into the broker and then we'll look at here the strategy. So like I said, I use Moomoo. They're absolutely fantastic. They offer really good charting tools so you guys can draw on it. Like with this stock here that we recently traded, we drew this trend line and you guys can see each and every time it hits this line, we've gotten good buying pressure. Also, they have different things up here to change the time frame depending on what type of trader you are. So if you're like a day trader, maybe you'll pay attention to like the minute chart. If you're a long-term investor, you'll look at the weekly chart and you can make investment and informed decisions that way. But I do think one of the things that's important with trading, at least for me, is indicators. Indicators like moving average lines, RSI lines, MACD indicators are very important because what they help you do is just get a general gauge of what the stock has done in the past. And these indicators are formulas that hedge funds have created to help gauge where the stock can go. So, one of the things here that I always look at is moving average lines. So moving average lines here, we'll throw some up here. Moving average lines are these blue and red lines right here. Now, looking back, you guys can kind of see here, if we remove this trend line, each and every time it kind of hits this line, we have good buying pressure here, right? So, this could be a possible entry point that you use. So these moving average lines are the 90, which is the blue, and then the red is the 200. The main difference between the two is going to be like support strength. So you guys can see, like the 200 is just going to act as a harder support, harder resistance. When the stock does fall below it, you can kind of see where it almost uses it as resistance. So in a perfect situation, you want to buy when the stock is above it like it is up here. So the next indicator I use here is something called the RSI line. The RSI line is this green line down here. This helps gauge, the general momentum inside, the stock. It's called the relative strength index. Historically, with most stocks, anything over a 70 is an overvalued point for the stock. Anything under about a 30 is considered an undervalued point. So overvalued above a 70, undervalued, under a 30. So in an ideal situation, right, you want to buy. We can make it a little bigger so we can see it a little better. But in an ideal situation here, you want to buy when it's under or around a 30 and sell up here. So honestly, if you did that here, let's go ahead and make it a little smaller. So if you did that, right, you guys will see that move went from 176, and if you sold it, around that 70 could be up to 213 previous to that, here to here. So this spot to this spot previous to that was this spot to this spot, right? So, indicators help gauge the general momentum and should you pretty much take that trade. Now, also, I think that indicator should be used as like a checkoff box. You shouldn't only look at one to make a decision on should you buy this. One of the things here that I also will look at is if there's any just general trends that the stock has. And you guys can see here with this stock here, it hits this line, several times, establishing good buying pressure there. So we'll remove these moving average lines. So you guys can see, right, it hits it several times, getting good buying pressure every time around that line. So now, right, in an ideal situation, you want to buy on the trend line. But how do you know? You don't only look at one time frame. What I did with this stock here is we actually had a nice downward trend, and we got in on that breakout where the stock popped up and it hit that 200-day moving average line. We let the stock ride out until it broke through that general trend line, and then we just took our profit. And yeah, the thing about trading here, it isn't like these massive returns, of 500%, doubling your account every 2 days. No, what makes up a very successful trader from a non-successful trader is a successful trader takes profit. And I know you're probably thinking, well, yeah, that makes sense. But you would be shocked with how many times I've seen a trader enter a position, watch the stock go up and up and up, and have them not execute, not have a trailing stop loss, not have something in place. And then before you know it, the stock turns around, sells off, and then they're out on their money. And then by the time, the stock sells off, they try to sell it and they lost money. So, having a trend line, having a trailing stop, all that stuff is crucial for your trading. Also, another thing that I think is very, very important with trading is to journal your trades. Journaling your trades is honestly, in my opinion, probably the number one thing new traders don't do. This is the journal I use. It's called Mastering the Swing, a Trader's Journal. I'll put this down below. You guys can get it right on Amazon. It's awesome. And doing that, what that does is it helps you understand what's working with your strategy because you can visually see it. Okay, I took a trade on the 200-day moving average line. It worked. When I took a trade on the 50-day moving average line, it didn't work. Boom. Now you know, okay, maybe in my strategy, I only trade stocks on 200-day moving average lines. Boom. Doing that is literally such an easy way to go through and see what's working and what's not working so you can improve your future trades. So check out that journal. It's awesome. And just journaling in general is awesome. You don't need that one. That one will just help you, keep everything more organized. It helps you with emotion, but you can use, a 99-cent journal from the dollar store and do the same thing. It just all depends on you. So guys, this is a very simple approach for how you guys can start making money with your trades. And you're probably saying, well, Carter, how often do stocks sell off down to these moving average lines? Well, one of the plays here that we took, with the trade was actually on Costco, right? Costco sold off down to that 90-day moving average line. It's hit it in the past, and we've actually traded the stock before. So we decided to take a little trade here and enter on that moving average line, keeping our stop loss right now just below it for a possible push going higher. I think that's important, having everything planned out. And this stuff happens every single day where stocks always have opportunity. So if you want to learn how to find these plays, check out our school, code YouTube to get 20% off, and I'll see you guys in there. But I hope you guys learned something. If you did, hit that like button, subscribe, and I appreciate you guys making it this far in the video. It does mean the world to me. So we'll see you guys. Hope you guys enjoyed it. Take care.